welcome to another Smaulgld live stream. Yes, this is another live stream today, Friday the 6th of September. We did one this morning discussing the impact of the release of the Bureau of Labor Statistic employment numbers, new jobs created, and that had the impact of driving gold and silver prices higher. They missed expectations, and that led people to believe that perhaps the Fed would follow through in order to avoid the economy further deteriorating, as evidenced by a deteriorating labor market by lowering interest rates. Well, those hopes were dashed later in the afternoon, just a couple of hours ago, when Fed Chair Jerome Powell spoke in Switzerland. And today he said that he did not expect to see a recession, and that sent the markets going in the other direction, at least the gold and silver markets, and the equity markets rose. I guess they took that as good news. So we're going to take a look at some of the things that Jerome Powell said that impact the short term. But today's topic or title is Powell rejects a global reset. And that's not what's moving markets today, but it is important because we also hear a lot of the gold pumpers always talking about a global reset. It's one of the classic stories. We'll get into that, what he said about that. Also, not only what Jerome Powell said about it, but also with what Swiss National Bank Chair Jordan had to say about a global reset and dollar hegemony. And also, this Swiss speech did reverse gold and silver gains, as Powell indicated that he did not think that there was going to be a recession. But I'm going to get into some of the specifics. Remember, if you go over to Smaulgld.com, anytime we discuss anything in detail on the show, we show charts, we have quotes, we reference articles. They are all linked on Smaulgld.com. So you head over there. If you subscribe there, you will get the full package after the video is produced and run on BitChute and YouTube, and then you'll get an email that has a link to the blog post on Smaulgld.com, which includes the video and all the materials that support that video. So you can take a look at those materials at your leisure. You may not even need to watch the video. You can just look at the charts, read the tweets. Okay, so let's see, what did Jerome Powell say today and what happened? So today's been a very eventful day, not just because Smaulgld's done 2 live streams, but because we have had the market go in 2 different directions. So first, let's take a look at the directions that the gold and silver markets have gone today. I've got a before and after chart here. So the gold price today went up and then it went down. So let's take a look at those charts. Silver did the same thing, and in fact, we have almost a microcosm of what happens in gold and silver. When gold goes up in a bull market, it goes up a little less than silver. Silver tends to outperform it. And then when gold goes down, silver tends to go down more. So let's take a look at those stair steps that we have today. So here's the gold price today. And you can see right around the time before the labor market statistics were released, before that miss on the jobs numbers came out, you can see where the arrow is. Gold had gone all the way down to $1,500. Well, when they release those numbers, you can then see underneath the arrow, all of a sudden, boom, the price shot up to $1,527 and kind of held out there until Jerome Powell opened his mouth later in the afternoon, around noon, U.S. Eastern Time. He was speaking later in the day in Switzerland. And boom, he sent the gold market back down with his comments, which we're going to go through in some detail. Some very interesting comments that he made, not just the ones that impacted us short term. And then you can see down went gold. So gold is now down $11, having been up about $20. And so that's a pretty big swing for gold. And right now, I did this chart a while back, gold has drifted even further down, and the time I took this chart, it was $1,507. It's now down to $1,505. So we're down less than 1% on the day, but we were up at one point. And let's look at silver. Same thing happened to silver. Went up and then it went down. But right now, silver is down nearly 4%. Classic motion. Silver going down on a down day much more than gold. Remember, gold a few days ago was yesterday, $19.50. And right now it's just at $18. It's gone up to $18.09. But when I took this chart during the day, at one point we were down to $17.98. But you can see it took the same ride that gold did before the labor market numbers came out. It had drifted down to $18.10, and then boom, the labor market numbers, the job numbers missed, all the way back up to 1874, 1875. Hung out for a while at that level. Then Powell goes on stage, opens his mouth, says we're not going to have a recession, which means they're not going to lower interest rates. Boom, down goes silver, back to where it started at the beginning of the day, which was already down and is now down 4%. Now, what exactly did Powell say? Now, if you want an analysis on the job numbers, we already did a video on that earlier today, so check that one out. That one's about the Bureau of Labor Statistics. We compared and contrasted their numbers with the ADP numbers. All right, so let's see what Powell had to say and why there was such a reaction to his speech. So there he is. Everybody was anticipating the speech today. He actually didn't give a speech. He participated in a forum with Jordan, who is the head of the Swiss National Bank, moderated by a guy who was asking questions, some Swiss guy, I don't know his name, and then a couple of questions from the audience. We'll go through the highlights of what was said and then the impact on the market. So Powell opened up with... They were asking him about the 2020. One of the things that was on everyone's mind is whether he's going to make political decisions based on, or whether he's going to make monetary decisions based on political considerations. And the reason this was a question, I'm jumping around a bit. I'm not going chronologically as to what he answered. I'm just picking up the high points, what was said. I'll put a link below if you want to watch the whole thing. It's an hour and 20 minutes. I watched it. I'll give you the highlights so you won't have to watch it. But one of the questions that was on a lot of people's minds was when William Dudley, the New York Fed president, former Fed president, wrote two op-eds in the last week or so talking about how the Fed should stand up against Donald Trump, not enable his trade war, which he deemed to be disastrous, and not lower interest rates because, in a sense, that would be giving Trump cover, meaning that he would then be able to fight his trade war, which Dudley believes is not a good idea, and that would cause a recession. And we've done another show on this as well. You can go back and check it out on the whether the Fed is truly the enemy in that it can either wittingly or unwittingly, by not coordinating its monetary policy with national goals of the administration, do damage to what the president is trying to do. They're just committing their policy and they think that it's independent of what's going on. Well, Dudley actually believes that if they know what's going on and they don't like what's going on, they should try to stop it. If they think this trade war is a bad idea, if they think this is going to cause a recession, well, then they should signal to the Fed that we're not on your side. And our job is to stop a recession. Now, we talked about this the other day. Stopping a recession is not necessarily the Fed's job. In fact, their actual mandate has nothing to do with stopping recessions. It has to do with what they call stable prices and full employment. Now, they could argue that stopping a recession would come under their mandate of trying to make sure they have full employment. However, when is the full employment supposed to be had? So, for example, you could have a recession which may be considered a good thing, meaning that if that recession is actually longer term going to create positive economic conditions which would lead to fuller employment and better employment. So, for example, Trump probably believes that even if there is a recession due to the trade war, when we come out of that recession, we may have a restructuring of the U.S. economy, higher manufacturing jobs, higher wages, and so on. And this isn't a far-fetched way of looking at things. You may agree or disagree on whether that can happen. What we saw back in the late 70s and early 80s, that the Fed actually encouraged a deeper recession by raising interest rates because they were trying to break the back of the inflation. So sometimes stable prices and full employment may run counter to each other. The idea, though, however, that former Fed New York President William Dudley was outwardly advocating to not support the president, to undermine the president in 2020, because he believes that what Trump was doing was harmful to the economy and could cause a recession. Powell, when he was asked about this, emphatically denied that political decisions, the 2020 election or any other political decisions, will play a role in Fed decisions. And he said that it's not in their DNA, that any suggestion that they would do that is simply wrong. And that this did, though, however, was a rejection of Dudley's view that the Fed should not enable Trump's war with China by lowering interest rates. However, Powell can say all this, and he can say that everything we're doing is absolutely not on policy, on political factors. We're making these decisions solely on the basis of our view of the economy. Well, if he doesn't if he doesn't lower interest rates, he'll have the same effect. He will not be enabling Trump and his trade war with China. But the one thing that Powell will be smart not to do is say the reason they didn't raise rates will have nothing to do with not wanting to enable Trump's trade war. He'll just mention that the reason they didn't lower interest rates is they didn't think that the conditions warranted it. And as he mentioned today, he thought that we're not going to have a recession. So the result is the same without the political grandstanding, meaning that if the Fed doesn't lower interest rates, then they're not enabling Trump's trade war with China by helping him out with lower rates, even though they're not saying that, and they're actually emphatically denying that there's anything to do with politics. So you'll never know if they actually had anything to do with politics. You could take a decision that's purely political, but just never say it's political and give other reasons. Now, the other thing was interesting remember the other day we talked about Greenspan. There was a video we had done with Alan Greenspan, and we mentioned that Greenspan suggested that we would have negative interest rates in the United States soon. Greenspan had a very interesting take on it. He said the reason we're going to have negative interest rates is we've got people aging in the United States. And they want to make sure, he said, that they buy assets that they know are going to provide them with a rate of return. Now, you would think, or at least be solid. And he said, and they don't know what they're doing, because as they do that and they buy these bonds, they're raising the demand for the bond, they're raising the price of the bond, and thereby lowering the yield on the bond. So he's blaming a bunch of pensioners for buying bonds for these low interest rates that we have. Not blaming central banks for having driven these interest rates down, but blaming people who want to buy bonds. And he's basically saying because we've got a larger demographic of older people, this is inevitable. Well, you could tell Powell must have heard that, and he said today he blamed lower interest rates on older people bidding up bond prices. And again, he didn't say it's because central banks are cutting rates. When the central banks talk about this stuff, they make it sound like this just kind of happened and, they're dealing with it. But they don't mention that they caused this, that their decision to lower interest rates down to zero from where they were was unprecedented. The rate of cuts was unprecedented during the financial crisis. Leaving them there for so long was unprecedented. But now they're making it sound like, well, this is the new normal. This is just kind of what happens when you got old people buying bonds. It's kind of farcical, but that's what they're basically saying is this is the new normal. Had nothing to do with us. You got old people buying bonds, and what are you going to do? So now, what are we going to do? Well, they're talking about these tools that they have to, new tools that they have to engage in and figure out what they're going to do. And let's see, what else did they say? Yeah. So he says the main challenge of central banks now is their inability to use interest rate cuts. Yeah, because they used them up too much in the last crisis. They were overly aggressive in that. And he says, we need new tools. And we saw this the other day when we took a look at the Fed minutes. They're talking about, well, those new tools that we have are things like quantitative easing, buying assets, not just government bonds, but agency bonds. We've seen other central banks buy stocks, buy corporate bonds, And what they were saying at the last Fed meeting was there was a discussion that, hey, we'd learned how to drive drunk. We learned how to buy a lot of assets and nothing bad happened. So we're looking forward to figuring out in the next crisis how we can maybe print more money and buy more assets and more varied assets, not just government bonds. So clearly all central banks are acting like, not that they made a mistake in driving interest rates down to zero, not like they made a mistake in buying all these assets, but that they made a mistake and they should have bought more, or they should have driven interest rates even lower. And so Powell is repeating this nonsense, saying we need new tools and new ways of communicating. He was actually touting the fact that by giving forward guidance that actually helped the economy, but just by the Fed saying, hey, we're gonna lower rates, or we're gonna keep rates lower, that helps. Not sure. And he noted that this low interest rate environment, this low growth, low interest rate environment, has pretty much stagnated the Japanese economy. To a lesser extent, it looks like Europe is heading in that direction. And he essentially was saying the U.S. is headed there too. So was Greenspan. So it looks like they're blaming old people for all of the ills of the economy. Basically, they're getting older, they're buying bonds, they're driving yields down, and what are we supposed to do? Well, we're going to have to juice the economy in other ways because we can't lower rates anymore because we've got all these old people buying bonds. But what really drove the market down today was not that analysis. He opened up talking about how the economic outlook is favorable. Well, yes, okay, it's favorable. Trump is saying it's favorable, but it could be more favorable if you lower interest rates. And he's saying, no, we don't need to do that. The labor market is strong. We've got a higher labor force participation rate. We've got growing wages. We're not worried about a recession. That is not the most likely outcome, according to Jerome Powell. What he did say, there's significant risk to the outlook that there's not going to be a recession. There's slowing global growth and trade policy uncertainty. But we're not going to do anything about that because right now we're just going to wait and see. Let's take a look at incoming data. Let's take a look at what happens at Brexit, Hong Kong. But right now, it doesn't look like we need to really drive rates any further. But he gets asked a question later, and he kind of hedges again on that. I don't think people caught that, but we'll get to that in a second. Also, with respect to digital currencies, this was interesting. There's two things here that kind of blow all these theories out of the water, like XRP is going to be used by either Fed and Ripple, and the other is we're going to have a global reset. Powell said, I mean, if you can believe what they say, he says Fed is not considering digital currency. I know we talked about this a couple of years ago, the Fed had a working group called Faster Payments. All central banks were concerned that the main reason digital currencies were gaining traction was that the public wanted faster payments. And I don't think that was the reason. I think they wanted a currency that couldn't be printed ad infinitum, but they were telling themselves that the people want faster payments. Now, what they have noted is, I think, which kind of cooled off their ardor for thinking about whether central banks should do cryptocurrencies. One is the security issue. So they do mention that all the time. They're not quite sure that that's the most secure thing you can do. Secondly, they've also seen that the adoption for payments is not that great. And Powell mentioned that he says there's no real demand for consumers. They're not really clamoring for faster payments. So that looked like that might have been a concern for central banks. They've pretty much realized that mostly what people are doing with cryptocurrencies, they're holding on to them as digital assets and not so much spending them. He also mentioned, which is interesting, which is a self-serving point, is that if people hold digital currencies, they're not putting it into banks, so there's no intermediary, then the banks don't get to loan that money, meaning that there's no fractional reserves that can be done. If people just buy cryptocurrencies, store them in their own private wallets, they view that as like a threat. They view it as a threat, obviously, to the banking system, but also a threat to the economy because that money doesn't circulate in the same way that it does now. And, of course, it does put banks at a disadvantage because they don't get hold of that capital. They don't get the multiplier effect. They don't get to lend it. It puts more control into the holder of the digital assets' hands than the central bank. And, of course, then they can't, quote, conduct monetary policy and fix all the problems of the world. The Swiss National Bank chairman was also there, and he said it's not a good idea. So we'll see what happens. We know we have smaller central banks like the Marshall Islands are looking to put together a cryptocurrency that has some type of limit on it where it grows, but it only grows a certain amount a year. Also on the trade policy, Powell mentioned that central banks don't have a lot of experience in dealing with trade policy uncertainty. Now, there was a guy who asked, he said, the markets are expecting accommodation. We're expecting you to lower interest rates in the next couple of meetings. And Powell kind of punted on that. He said, we're watching Brexit, Hong Kong, incoming data, financial condition will act as appropriate to sustain this expansion. So a lot of people took away from this today was that they weren't going to lower interest rates because he said we don't perceive a recession. However, he did say that act as appropriate to sustain the expansion. There is a distinction between not having a recession and not having an expansion. And if you're going to be flat and you're leaning towards recession but not going to have a recession, that doesn't mean the way he's thinking, the way he's talking, that they wouldn't lower interest rates to, quote, sustain the expansion. And that's a nuanced point of view, but I think it is possible. You're still going to see rate cuts because he wants to sustain the expansion. So we didn't really get anyone focused on that. The market generally just took all this as being, no, they're not going to raise rates because I'm not going to cut rates because there is no recession on the horizon. Now, get into some more longer term, more, I think, interesting than just the day-to-day trading points that Powell made. Now, remember when we said that the Fed could, I think we did a couple of videos on this saying that, or questioning whether the Fed is the, quote, enemy, as Trump called them. And the reason he called them the enemy was first because he was upset that he was doing his trade war stuff with China and Powell was doing his monetary policy really without any consultation with the president because the Fed is supposedly independent. And to Trump, he's pointing out, this is nuts. Here I am, I'm going to go do something. I'm actually going to announce something, tariffs on China. And the Fed, and Powell's making a speech the other day about what he's going to do about interest rates with absolutely no consideration as to what we're doing. So Powell is noting, has already noted that we don't really have any ability to deal with trade policy uncertainty other than just conduct their monetary policy. And someone in the audience asked a very good question, which highlights this point that I was making, that the U.S. is at a disadvantage and the Fed, it's an actual flaw in the Federal Reserve system, that they don't work with the United States, that they're somehow independent, which means they cannot work with their own government because they're not part of the government. So they actually can do what they feel like doing, and in a sense, they can become rogue, as Dudley is suggesting they should do. So someone asked them, how does the Fed cooperate with the People's Bank of China? And he was talking about how does the Fed and all other central banks actually get together and talk about coordinating central bank policy, which is something that I always say they do, and it's obvious that they do, but you have all this currency war nonsense where they're saying that they all work to try to... Anyway, what Powell pointed out, though, and he said, quote, we are not part of the government, and we don't have discussions about trade with China, and we also don't have them within the United States. He did point out, though, that the People's Bank of China itself, the Federal Reserve of China, or the National Bank of China, is actually part of that conversation in China. In fact, the government of China can direct the People's Bank of China to conduct its monetary policy, to send money to certain areas of the economy as part of its trade war with the United States. So if the Chinese government or Chairman Xi thinks that a certain segment of the state-owned enterprises are going to be harmed, the manufacturing ones that ship goods to the United States, the People's Bank of China can lower reserve requirements of banks that lend money to those particular state-owned enterprises, the state-owned banks that lend them money. They can instruct the state-owned banks to forgive loans to those state-owned companies. So the People's Bank of China ends up being an arm of the Chinese government. And that is the case in every central bank in the world other than the United States. So Powell pointed that out. Now, he's also, during his discussions, he's talking about how wonderful it is that the Fed is independent, that there's these 12 different reserve banks all over the country. We get diversity of opinion. It's part of our history. And he was waxing lyrical about the Fed and its independence and how it's set up all around the country and why it's better than the first two central banks of the United States, because those first two central banks were basically East Coast interests. Well, yeah, basically, the United States only was East Coast in the late 1700s and early 1800s, when we had the first two central banks. But he was bragging about the central bank being diverse and all these different Federal Reserve banks around the country, when in reality, it's only the New York Federal Reserve that actually makes a difference. But he did point out, and this is the point we were making, but he was looking at it as a feature, not a flaw, that the PBOC is part of the conversation in China with the government on trade, but that the Fed is not part of those discussions within the United States on trade, which is Trump's issue. And, of course, they can't talk to the People's Bank of China about trade because they're not authorized, or they're not the representatives of the United States on trade. So, again, I think he's highlighting what I think is a flaw. He's saying it is a feature of the Federal Reserve System. All right, now here's one, which is kind of the topic here. Again, another pumper one: global reset, SDR, gold back this, and new global currency, end of dollar hegemony. No. They asked, what type of tools are you talking about in the audience? And they were talking about international changes. And Powell said, we're talking about new tools. We're not talking about returning to a different international monetary framework or having a global currency. Now, let that sink in. All this talk about it, people base their decisions, it's going to happen, the global reset, SDR, because they hear somebody who's got a newsletter or is pumping something or other say these things. And of course, you can't refute them because they don't happen. You can say, well, it hasn't happened yet. So they're never wrong, but they're not right either. But they keep coming up with these things. And if this doesn't happen, then they say the COMEX is going to default. And if that doesn't happen, they say, well, JP Morgan's bought a bunch of silver eagles. Well, if you can't prove it. See, there's always a story that can't be disproven. But it doesn't happen. Anyway, he says we are looking at domestic issues on how to deal with inflation. So when he's talking about new tools, he's not talking about global reset, coming up with a new currency, new world reserve currency. That was Powell. Then the Swiss guy actually made a much more cogent point, because it is true. I mean, anytime that people make up these stories, there's some truth, maybe not to it happening, but there's some underlying fact that you would say, well, they don't like that the dollar is the world reserve currency. But there's a big stretch between not liking the dollar's reserve currency and the world actually changing just because someone doesn't like things. So, for example, in the United States, there's a lot of people who don't like to pay higher taxes. So that's like saying, oh, they're going to eliminate taxes. They're just going to get rid of them. It's coming in 2026. I saw it on the cover of some magazine, and if I stand on my head and listen to Jimi Hendrix backwards, it says no taxes in 2026. This is the kind of nonsense that you get, and people believe it. Well, you can't prove they're not going to get rid of the IRS. No, you can't. But there's no reason to believe it's actually going to happen just because there's people that don't like to pay taxes. Just because there's people who don't like, there's countries that don't like the dollar hegemony, that somehow it's going to go away. I mean, the United States is a superpower. And because South Africa or the BRICS, they don't like it, all right, so they don't like it. Go ahead and do something about it. They don't really have the power to do it. So the Swiss National Bank chair answered, look, as long as the U.S. is the dominant economy, it is, the dollar will be dominant. You can't change that unless other regions gain in importance. Now, he's saying this as a European. He's saying this hopefully that the Europe will do better, but he knows that it's not happening. He says you can't order a change. Dollar funding globally is dominant and will continue. Those are his words, not mine. When people hear me talk, they say, you're defending the dollar, you're a dollar shill. Well, that's just stupidity. I'm an analyst. I'm not defending anything. I'm explaining how things are. And he even noted that dollar dominance and dollar global funding has increased the last few years. That's a fact. Oh, but the BRICS have had it in de-dollarization, and I saw some YouTube. No. These are people that are either just regurgitating nonsense, they don't know any better, they want to believe this, whatever. They're looking for clicks. There is no end of dollar hegemony. Yeah, anything is possible, sure. There could be a recession too, but everybody likes to be calling for the end of something, the collapse, and people love to hear it. They'll rather watch 10 videos explaining why something's going to collapse or something's going to skyrocket than to hear any dose of reality as to what the chances of those things happening are. Of course it's possible. Anything is possible. And I guess people like to tune in to stuff that's possible, and if they hear enough people say it's possible, they think that increases the likelihood of it happening. It doesn't. It just increases the likelihood of you watching more nonsense and thinking that somehow that increases the likelihood of it happening. All right. Well, that's what happened today. I thought it was very interesting that Powell went out there. And again, this is all short-term trading stuff. There'll be new news. The real thing that's happening that I believe that I take away from Powell's speech is we got low interest rates. And they could go lower. And there's not much. He basically said the new normal is we need new tools. Can't lower interest rates very much more, which means they're going to be stuck trying to buy more assets. Well, if they're going to buy more bonds, what's that going to do? It's going to drive the yields even lower, even if they don't artificially just change the interest rate. So I think the general theme is still intact, regardless of what happens with China and the trade talks. That's all short term. We don't even know what's going to happen there, but they keep holding out that there's a possibility that things are going to get better if there's a trade deal. But nothing has changed to the extent that we have this low growth, low interest rate environment, and we're not going to get higher rates, and they're not going to allow higher rates, and they're going to try to buy a bunch of bonds. And as I mentioned, that's all good for fixed assets like gold and silver. So let's see what you all are saying in the comments section. Let's get back to put up the fundraising page. We got a very nice donation today. I'm not going to mention the person's name, but it's actually a 3-figure donation. I was very happy and pleased to see that, so thank you very much. We got a patron yesterday looking for one today, or a subscribe star person, or of course Bitcoin and Litecoin donations are welcome, as are donations sent to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. All of your donation options are on the screen right now, or they're on the Smaulgld website, or at the links below this BitChute and YouTube. I really do appreciate the support, because while I did get a nice donation today, as I mentioned to someone in the comments, patronage is, I think it's $95 a month, and there's obviously a lot more work going on than $95 worth a month. Okay, so let's move on from that and see what you guys are saying. We got a big crowd here today, and let's see what questions we've got. Hare Krishna. We got someone from the Philippines. Carl from the Philippines. Hello, Carl. Coins AZ is here. Max Strong is here. 3 streams in one day. That could be, yes. Ann is here. All right. Powell. Powell didn't say any good words for cryptos. No, he didn't. He mentioned Libra might be an issue, but he was not a big fan of cryptos. He says, but he's not against them. He says, we will like innovation. It's really kind of didn't really say much about cryptos at all. Jason Osari. I haven't seen Jason in a while. Jason was a guest on the Smaulgld Subscribers Sound Off a while back, probably over a year ago. Blaming old people is the fastest way to get voted out of office. Lucky for Powell, he doesn't have to worry about that. Yeah, it's funny when you see old people blaming old people, not necessarily Powell, but Greenspan. They may not think they're blaming old people. They're blaming a demographic shift. But he made it kind of personal. He says they don't realize when they buy these bonds, they're driving rates lower. Like they care. They're just trying to hold on to something. He did mention, though, not Powell, but Greenspan, because Greenspan is a former gold bug, that this is a good situation for gold. That's what people are going to buy, because there will come a point. He's right. If the bonds keep getting bid up, there's no interest rate, then people are going to start to think, what's the chances? What chances are higher of default? United States or gold? Well, gold has a 0 chance of defaulting, so answer is gold. Yes, Ryan Hill says ETF holdings started. Backed ETF holdings started tonight. I think backed custody started today. I think that Van Eck also is going to start ETF trading for private placements. So yes, there is a lot of things going on. All right. What else do we got here? Trump tweets have enlightened more people to the nature of the Fed the last 10 years of YouTube. That is true. I think, and I don't know if you heard them, Jason, but the three videos I did on whether the Fed is the enemy, I wasn't taking the position on what their policies were, meaning I wasn't saying the Fed is the enemy because they print money or because they do QE. I mean, that's reason to say, yes, that's a problem. But the real fundamental issue with the Fed is, once you get beyond the fact that all countries have central banks, a lot of people conflate the idea of having a central bank with being the Fed, and because the Fed is bad, a central bank is bad. A central bank is pretty much could be a neutral thing, because the central bank, if it's working for the government, it depends on what the government does with it. A central bank run by the Treasury can be just as bad as the Fed because they can print money too. But the difference is that it's subject at least to politics, meaning that if the Trump administration had control over a central bank, and it wasn't the Fed, it wasn't an independent, privately run bank, but it was owned by the Treasury, and Trump said, you know what, just print a bunch of money, and he created massive inflation, or he created a disaster, well, then you get rid of him, and you get another president who appoints another Treasury secretary who's not a lunatic. I mean, that's how it would work. But because we have this Federal Reserve, they could become the enemy because they don't have the same goals. They have these separate mandated goals. They can do whatever they want. They can go rogue, and you really can't do much about it. Greenspan is always talking about how there's very little way you can get rid of the Fed, the people in the Fed. They pretty much can do what they want. They're independent. That's probably not a good thing because they're not beholden to anyone. The purpose of a democratic republic is to have people be beholden to the people that vote them in. All right. Carl, sorry, if there is no global reset. See, people have gotten that drilled into their head that there is coming a global reset. Mike Maloney says it, Jim Rickards, they all say it's like a fact. It's going to happen. And they talk about as if SDRs or whatever it is, like that's just going to happen. There's no guarantee that that's going to happen, or a guarantee it's going to happen on any timeline, and who even knows what it would look like. But they insist they know, and it's going to happen. There's no global reset. What kind of status of global finance and global economy are we heading into? I don't know. But nor do these other people know. They don't know what's going to happen. They're not sitting in on meetings and determining what's going to happen. They're just making up assumptions, and they get a lot of people to agree with them, and then they repeat it, and they say, oh, this is what's the global reset. What role does gold and Bitcoin play in the end? I don't know. I have no idea. Maybe none. There's no guarantee. Like the people who write these books on Bitcoin or gold saying what's going to happen, they don't know. I guess people like to hear people who say they know, even if they really don't know and have proven over time that they don't really know and that their predictions have been worthless, but it doesn't matter. It sounds like they know. People look, again, this is not an investment advice channel. This is just analysis. I think if you do analysis, you can figure out your own, but instead of listening to people who sound confident in what they're talking about, maybe do your own analysis and try to understand what's going on. Carl, Jason, the only way I see to avoid a reset would be to recover all the funds that have been stolen, the assets purchased with that missing money, and use them to pay down debt and grow. Well, one thing they can do, and there wouldn't have to be any reset. Well, I guess it would be a reset. You can have a jubilee, a debt jubilee, but it's too many. That's a tough one. Okay, let's see. Glad you're putting sense into the Fed, says Pablo. Jason Lewis, thoughts on Jason Barak's thesis that China is out of dollars and cannot bail out some of the failing banks? Well, that's not his thesis. That's been around. I've been talking about this before Jason even thought. Jason used to interview Bill Holter and Jim Willey, and he used to believe all this China to crush the dollar nonsense. If you go back, look at the last couple of years, I did interviews with Jason, disabusing him of that concept. The idea that China was crushed the dollar was nonsense because I said that China runs on dollars. The whole idea that they're going to get rid of the dollar is ridiculous because I pointed out years ago and have been pointing out for years. I guess you haven't been following Jason, and I was pointing this out two Jasons. Yes, you haven't been following Jason. I pointed out to Jason that the Chinese economy runs on dollars. Their state-owned enterprise lends in dollars. The state-owned banks lend in dollars. And even the Chinese government has issued a U.S. dollar-denominated bond. This is something that people who follow the gold pumpers never understood, never wanted to know, because all they kept hearing is China to crush the dollar, Sun Tzu, and gold back yuan, and China. Not realizing that China is totally dependent on a dollar-based economy. Now, Russia is not, but China certainly is. So, yes, China is running out of dollars. There's a dollar shortage. Kyle Bass has been talking about this for the longest time as well. Margin update. No, Botsky is asking a question. Now, remember, the margin update, I mentioned yesterday, I didn't get into it, the CME group raised the margin requirement on silver contracts up like 19%. And I said yesterday that would have the impact of people who had gone long might have to sell their positions because they don't want to pay the 19%, or they don't even have the 19%. Now, technically, it goes both ways. The shorts can also, it's a neutral on its face, but in practice, I think it's not, because the shorts also, in order to preserve the positions, would have a margin call. However, if you know anything about the COMEX, the way the COMEX works is, well, not the way it works, but the way what's happened is, generally, the larger traders, the commercial traders, are almost always net short silver, and the non-commercial traders are net long. So who's more likely to have the wherewithal to meet a margin requirement to defend a short position or a long position? Well, obviously, the commercials are, and they're on short. So they can actually help the price go down by forcing the longs out of their long position by increasing their margin requirements. And then the shorts can buttress their short positions by just ponying up the 19% extra, which is probably no skin off their nose if they have a trading, if JP Morgan has a trading desk meeting a margin call. It's not like they have trouble finding the money to do that if they so believe it. Yes, Max, Kyle Bass is the same thesis. Yes. All right. Lewis, about how the Fed's independence can be counterproductive to the government is a great point. Yes. The problem with the current monetary system, says Bowinsky, is the unpayable interest on the debt. It's like borrowing money from the mob. Yes. All right. Hubzilla, haven't seen you for a dog's age. Yes, good to see you back here. China may be wrong. China maybe made wrong bet on dollar derivatives, thinking dollar would depreciate. Now maybe not enough treasuries to supply needed dollars. One of the things I also did 2.5 years ago, that's another one I sent to Jason, I think we even discussed it on one of the shows we did together, was when all the gold pumpers were saying, yeah, but China has gold and all they have to do is revalue gold. I did a chart showing even if they had all the gold, not just at the People's Bank of China, but every ounce of gold that might be in China, and they revalued it to $2,000, $10,000, $20,000 an ounce, it still wouldn't come near at the time to their $30 trillion in debt. Since then, they've more than doubled that debt. So this was the point that a lot of gold and silver pumpers do, is they talk in generalities. Silver is so useful in our lives. Well, so are a lot of metals. How much silver is needed? How much silver is there? When they talk about China is buying gold hand over fist, what does that mean? Are they only buying gold? How much gold do they have vis-a-vis their debt obligations? No one ever asked them. So I went and I pulled out all the data and I made charts, but no one wants to hear that. They just want to hear China to crush the dollar, end of dollar hegemony, game over, Sun Tzu says. And people believe it. And of course, if everyone believes it, everybody repeats it, then people think it's more likely to be true than if they listen to me, who's got 300 or 400 views a video. One thing I have to say is it's nice to see that Jason has dropped the whole gold back. I don't even believe the gold back yuan, but he used to believe all that gold pumper nonsense, and he doesn't believe it anymore. He's actually cottoned on to the idea, the reality, that China is a mess, that China is a global-based debt Ponzi scheme, that China is not going to crush the dollar. But again, when you have all the major gold and silver pumper channels who are promoting that thesis for the longest time, it's very hard to break through and convince people that China is not this massive, solid, hard money paradise because everyone wakes up in the morning in China and runs around looking for the gold because they believe in gold and honest money. No, they don't. China has more debt, not just at the government level, but they also now have it at the consumer level. They've got massive amounts of debt. They have more debt than, and that's the whole thesis, is that the United States is just printing up money and China is being productive. No, that is 1/97th of the story. China may be productive. What they're productive in doing is printing up money to engage in non-economic projects that have no return on it. Yeah, but they have all this infrastructure now and it's going to serve them well. No, it won't. Would you build a bridge in your backyard if you couldn't use it and then try to maintain and pay the taxes on it? What would be the point in doing that? All right. I think we're out of time, but I do want to thank everyone. I'll try to do another one today. I will try to do another video tonight. I want to thank everyone for joining me, and we will see you tonight. I hope. Ciao.